RBNZ cuts rates. Is the NZ surge signaling a new trend? On Wednesday, the Reserve Bank of New Zealand announced a 25 basis point rate cut, lowering the official cash rate, OCR, from 2.5% to 2.25%, marking the lowest level since mid-2022. The bank stated that future rate decisions will depend on medium-term inflation outlook and economic conditions, keeping the possibility of further cuts on the table. Following the data release, USD jumped more than 80 pips to a session high of 0.5695, hitting a 3-week peak. In fact, after last month's 50 basis point cut, the RBNZ had already signaled readiness to ease further if necessary. This latest move was fully priced in by markets. However, since August last year, the RBNZ has delivered a cumulative 325 basis point reduction, and with forecasts suggesting a low likelihood of another 25 basis point cut next year, investors are betting the easing cycle may be nearing its end. Meanwhile, markets broadly expect that regardless of whether the Fed cuts rates in December, a rapid easing cycle will begin next year. This policy divergence between the two central banks has fueled NZUSD's sharp rise. However, with the 10-year U.S. Treasury yield now down to 4%, and given America's growing borrowing needs and potential inflation rebound, investors should watch out for term premium, pushing long-term yields higher. A sustained uptrend in NZD-USD may still take time to materialize. Daily charts show NZD-USD entered a medium-term downtrend after breaking below 61 here on July 1st. The pair remains within a descending channel, indicating the overall bearish trend is intact. Support lies near 0.5 DD. But if NZD-USD breaks above 5v730 decisively, the risk of a trend reversal to the upside will increase significantly.